There is an economy out there. Welcome back to the show. EJ Antoni, Heritage Foundation Chief Economist, and Douglas Holtz-Eakin, American Action Forum President, former CBO Director. Core capital goods booming, 0.6 in February. Core capital goods shipments, 0.9 in February. Doug Holtz-Eakin, there's no recession. I mean, the one big beautiful bill with depreciation. This economy doing a whole lot better than people think.
Well, we entered the year with two big risks, Larry. I mean, we saw a big downshift in household spending in the fourth quarter, and so that was a risk to the downside. We've seen no evidence of that so far this year. We've had good retail sales reports, so that appears to be disappearing. And you're worried about the investment boom we saw last year. Was that going to taper off? Again, this is a really good core capital goods number we got today. And increasingly, we're going to have to worry about the defense capital goods as well, because we're going to see a replacement of some of the materials that have been expended in the war with Iran. So that'll be an upside boost as well. So those two risks haven't materialized. The third risk is the war. Looks like that's being handled quite well. I mean, the big risk there was upside on prices, and there's no real evidence of inflation expectations getting on board. You can look past it and get back to the 2% target. So
I mean, the bond market's
been remarkably resilient.
The bond market's been rather quiescent, really, in a range.
Yeah,
if there was big inflation expectations, you'd see spiking interest rates.
Haven't moved.
Jamie Dimon, in an interview or in his annual report, says inflation's a problem because of the war, and interest rates are going to spike, and we're going to have a recession. None of that stuff is happening, EJ. None of that stuff is happening. In fact, EJ, I went on the Federal Reserve Board website, data, statistics. God, I don't think I've done it in 25 years. I was hunting for even their version of M2, because M2 at the extremes, 30% growth in late 2020 and 21 caused high inflation. But now M2 growth is so low. Listen to this. 2024, fourth over fourth, M2, 3.2%, and in 25, same way, fourth over fourth, 4.1%. 3.5% M2 growth the last 2 years, for heaven's sake. That is going to throttle any major inflation breakout, EJ.
Larry, look, I don't think we're going to have inflation from a monetary point of view, which really is inflation. Inflation is a monetary phenomenon. However, not all price increases are inflation. And I think we are going to have some knock-on effects later in the year because of the spike in oil prices that we're seeing right now. There definitely is a supply problem. We have to acknowledge that. That's the reality on the ground. That's why dated Brent hit a record today. So again, it's not as if the futures markets are telling us that in December we're going to be in the same situation we are today. But in December, I think you are going to see some of those knock-on effects. Well, for example, the high fertilizer prices that we have right now are going to affect food prices in the future.
But then, EJ, other prices come down, okay? If you've got a ceiling on the money supply, I know it's not a perfect correlation, but I'm just saying, yeah, you have temporary price hikes related to energy, but that means other prices will fall. This is just elementary stuff. That's why you have to look through it. We're backed up on Iran information. We don't have enough time to go through this, but we will at another time. And I'm going to have to teach you monetary economics. Anyway, EJ Antoni, thank you. Dougie Holtz-Eakin, we appreciate it.